Hello everyone, and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of the little control panel, and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a few hours. Oh, Trevor, bless you. So if you'd like to watch it again, you can do so there, and we'd love it if you'd also subscribe to our channel and click on the bell to get notified. The handouts for today's webinar can be found in the control panel as well, just under the handouts tab, funnily enough. If you're having any problems locating or downloading them, please just let me know and I'll send you a link. The first handout explains the different technical terms that Trevor uses during the webinar, and the second describes the different products that we have on offer at FX Choice. If you're watching this on YouTube, please click the Show More button and you'll be able to see them in the description box just below the video. For those of you who don't know Trevor, I'm sure you all do by now though, but he has over 40 years experience as a technical analyst and trader and was the former global head of technical analysis at Bloomberg. Trevor, without further ado, over to you.
Okay. All right, Dan. Welcome everybody. What a week, big week. Dollar strength was the big story, and we're hitting a 9-month high, in fact. But let's go through it, and we're going to go through starting with the currencies, then the cryptos, then commodities, and then stock indices. But please, any questions you've got, please send them in the chat box to Dan, as he said, and please, anything you want me to look at, please just send a message there. As long as it's a general interest, then I'll try and include it. Right, well, let's start with the RRG, relative rotation graph on the G10 currencies. So this is, for those of you that are not familiar with it, is a representation of the relative strength of currencies and the momentum of the relative strength. So not just the relative strength, but the momentum. This tells us that the Australian dollar is the weakest, it's furthest to the left, and also it's heading down as well, and that means with low positive momentum. So this is a weak currency versus the dollar that is getting weaker. And as we've been hammering on about, the commodity currencies are getting hit hard. The Australian dollar, the New Zealand dollar are really leading the way down. New Zealand dollar also heading southwest. This direction of southwest means heading west means it's getting weaker. South means with low positive momentum. Canadian dollar, New Zealand dollar, Australian dollar, all of them looking very poor indeed. We've got some that are looking are in this quadrant too, but they're turning a little bit. So we've got a clear message here. The commodity currencies, those three commodity currencies, are really being hammered. So let's look at that on the charts. And well, we'll start first of all with not the commodity currencies, but the euro itself, the biggest of them all. So the euro is in a big, important state. It broke this neckline, and I mean, lots of technical analysts on my channels, and I'm sure in yours too, social channels have been talking about this, and you know, when is the break point? Last week we had this sell-off and then rise, ending the Friday before last back above the line again. But by Friday it had clearly broken here, and the count from this big head and shoulders, the weekly chart here, left shoulder, head, right shoulder, a measure from the head to the neckline, project that down, that takes us to 111 here. So that's a big call. 111, of course, is not immediate or anything like that. It's a multi-month picture. We've got a lot of support around there, but you know, the line itself is close to horizontal. That means the break should be powerful. It's a break. Now I've got to tell you, I mean, I'm of this view, so me myself, that this is a big break up for the dollar, down for big currencies like the euro and the pound. We'll see a similar pattern in the pound. But I've got a very good friend of mine who's an Elliott wave man, and he listens to what I say, and he comes on to me very occasionally when he has a very very strongly disagrees with me. And I just, for the record, I've got to say, and he's the guy that I really respect in Elliott Wave reading, and he said, and he showed me why this is to do with the ABC correction after a fifth wave, this being the fifth wave here, is that he said you're going to be very wrong about this, Trevor, your bullishness of the dollar. So here it is. I'm not an Elliott Wave specialist at all. He is, and so I listened to him. I have noted what he said, but the trend to me is my friend, and the dollar is strong. I can still see that, and he tells me that it's going to change. It's going to actually top out right here at this very moment now. So we'll see. There it is. But if it happens and I'm wrong and he's right, let's give him the credit. And he's done that in the past, where he's looked to me fairly straightforward what's going to happen next, and then it turned out not to happen. So here's the weekly chart. Let's go to the daily chart now. So we've got this downtrend in here, breaking the support points. Two attempts at the break, but one final break last week. We steadied up, and we steadied up a little bit today, but there's so much resistance about here. So to me, it's going to bump its head very, very quickly and start to turn down. So it's the trigger, the breakdown, the continuation of the move is fairly obviously 1660 here, new low for this move. We've started to rally here, but all sorts of layers of resistance coming in now. We're at the very first one here, which is at 117, and we just moved into that area now, but it builds up. If it broke 118, that would relieve a bit of pressure, but still there's resistance above. If it broke 119, then clearly we haven't, that head and shoulders idea is absolutely wrong, and my Elliott Wave friend was right. But at the moment, this is just a two-day counter trend move to me, and I would treat this as a bit of an opportunity, like any of these ones in here set up in a move against the trend. Moving now to sterling cable. So the British pound, let me start with the weekly chart again here now. This isn't a head and shoulders, is it? It's a double top high on the spike high, then almost exactly the same high up in here. And we broke that, in my opinion. I know we had the spike low here, but it was rejected. But I think that was a very weak close through the major support here. It will be confirmed, of course, if we do break the low here, which is at 135.70. That would be then it would be obvious that we're very clear and obvious that we're going down. Let's move these out of the way here. The MACD is negative, the RSI is negative, and the count from this is down to 132, but we pick up support above that at 133. So watch out for that. The support is quite strong there, and I would expect it to hold. So here we are coming down. You see, we haven't really cleared this low properly yet, but as I mentioned before, 135.70 will confirm it. And we're moving down. I think that this trend with lower highs and lower lows is intact here. So I'm sticking with my view here. Now moving to the commodity currencies, let's start with the Australian dollar.
Trevor, can I just interrupt you?
Please.
Whilst you're on the pound, we've had a request to look at the pound yen, please.
Okay, yeah, okay. Thanks for that. Here we are. Now, remember where the yen was in the relative rotation graphs. Look at it here. Now, this is the one currency which is really, first of all, very close to the dollar, so it's correlating highly with the dollar. So the dollar strength is being matched, correlated by the yen strength. Also, the direction here is not southwest, but it's northeast. So it's just underperforming the dollar, just doing that, but it's strengthening, and I wouldn't be surprised if next week we're on the other side here and it's actually outperforming the dollar. So this, let's say, if you were pairing off weak currencies like the pound and the commodity currencies, then this, as with the dollar, this would be a good one to pair it with. So having said that, here we've got the British pound, Japanese yen going down. Here is the pound weakening versus the dollar. So we're testing now an important low. Just glancing at the, sorry, this is all mixed up. Yeah, so here we got, you could make a case here on the weekly for this having a head and shoulders top too. Let's be strict about it. So put it here, high, higher high. Is it a lower high there? So coming back to test that there, these are very important levels. Note these levels, particularly this level here of 148.44, which must hold because there's, you know, we came up very rapidly in through here, so we could fall very rapidly if that breaks. The count from the head and shoulders, if it broke the neckline, which it hasn't done yet, would be right down to 140, right down to 140. So what are we doing? We're coming back to test this low here, and that's a 148.44, and we've got lower highs pattern, lower lows pattern. The technicals, the RSI and the MACD are bearish. This does look as though hopefully you are short the pound and long of the Japanese yen, because that's how that trend looks like continuing. And you see that on the RRG there. So the yen is a good alternative to the US dollar if you want to sell currencies. Thank you for asking for that one. Okay, moving to the Australian dollar here. Here, well, look at that tumble there. But let's look at the weekly chart here. So here's, you know, warning what head and shoulders can be like when they really work. So high, higher high, lower high, neckline here. We broke that very clearly, you know, once we went through 75 really. We punched into this big cigar here. This is a big cigar. This is a Cohiba number 2 type of cigar. It's a big cigar as opposed to little Monte Cristo number 4 or something like that. So we were into this support here. The support is very strong here now. So I would expect this strong move we're having to start to weaken. But it is strong at the moment, and but it's punching into support. So if you're on the right side of this, then this is great. So weakness of the Aussie is still the right place to be, but the potential further movement, I think, is limited by that big support there. No sign of it at the bottom yet, although, you know, we've got one white candle here, but the RSI is weak and the MACD is weak, and the trend at 38, the ADX reading at 38 is strong. The Bollinger Bands are expanding, exploding outwards. So from this perspective, from a daily chart perspective, the downtrend is strengthening, but beware that it's strengthening into this support area here. So we find it harder to make certainly the pace of progress that it's been making down the downside. Okay, here the Canadian dollar was expressed the other way around. So this is rising US dollar here, and it is rising strongly. Again, this is a weekly chart here. It's punched through a number of resistance points, significant resistance points, quite powerfully. We've got rising lows and rising highs pattern here. The weekly RSI is positive. The MACD is positive here, and the resistance here is higher. It's at 130 up here, so we're still at 127.5 here. So there's still another 2.5 cents before we get into really serious resistance, and it is serious resistance there. So I think more to go on this one. So looking at it here, here's the breakout. This is a shooting star candle here on the daily chart that, if you were following the message of candlestick charting, would indicate 2 to 3 bar pullback in the market, and we're having one at the moment. But the support is strong here, and I don't think that this pullback will be amount too much. We may just pause for a little bit around here, but there's good support around current levels. Obviously, rising lows in here, rising highs in here, strong trend. The ADX is 28 and rising. The trend is strengthening. The RSI is up here at 66. Good reading here. I know it's pointing down, but you know that's only on this one candle here. It's up here because it is strong, and the MACD is positive as well. So this one of the two is the one I prefer because this one's got still 2.5 cents before it meets his resistance. The New Zealand dollar, I'll bring this one in here too. New Zealand dollar, as you know, that's a commodity currency, and it's also been weak. But look here, it's coming to what I think is a very big area of support. That line there is from here, from right back 2019, and so this one, you see that it hasn't got its 2.5 cents here. It's coming quite close to it. I think the potential, the best of it, is behind us now. On the daily chart, you can see it's bearish. There's no all the indicators are bearish, but you just be aware. Take a look, big picture look, and we're very, very close to significant support. You don't want to sell into a level which is so close to very significant support. So given the choice of the three commodity currencies, the one I like most, with still some room to go further, is the Canadian dollar. So moving now to the cryptos, if you're all done there. Now let's look at the RRG of this. So here we've got all of the cryptos on the right hand side of 100 here. That means they're all outperforming the dollar. You'd have been better this week in the cryptos than in the dollar. But look at the direction, southwest. So yes, they are right at the east of the 100, so they're outperforming the dollar, but they're losing momentum significantly versus the dollar. And this can either be dollar strength or it can be cryptocurrency weakness. They're close together. There isn't a lot in them, here from 110 to 116% there. So Bitcoin is weaker, Litecoin is strongest, and Ethereum is in between the two, but the direction is southwesterly. So let's have a look at now the charts, and we'll go in the order of Bitcoin, and Bitcoin powering ahead here, so outperforming the dollar. It's a terrific move, but let's get the context of this. It's had a terrific move, came back to 61.8, had a terrific move, but now it's moving into a big resistance area here, and I perceive that though everything's bullish on this, that it's going to struggle to keep the pace that it's got now. It is already weakening. We can see that in the RRG chart, southwesterly direction. It is losing some momentum on that. On the daily chart, of course, it looks good, but we can't see off on the left here all the resistance. So although, yes, it's great to be long of this, but beware that, if you're looking for blue sky above, it isn't blue sky above. There's clouds above. So where are blue skies? Let's look at Ethereum. So Ethereum, it didn't go quite as strongly as Bitcoin. We've got loss of momentum here. The MACD has turned negative there. I know we're having a good morning so far today here, but this is what I like about Ethereum. Ethereum hasn't got a big cloud above. Actually, it went up and down like that. It didn't hang around at all here. So I think that this can go further, and there isn't so much resistance here. So given the two, I think there's hazy skies, but not blue sky, but also not cloudy sky ahead. It's easier for it to go ahead. But looking at Litecoin, depending on how you look at the charts, might be the most interesting because it's forming a big base here at a very low level. It was slaughtered in the sell-off, went way, way below 61.8, but it's built a big base here. And some people are calling this a cup and handle pattern. The MACD is about to cross up. The RSI is looking good here, but look there. There's a big gap up here. We plunged so viciously here that it went so fast. There are not many people. We traded so little in that journey down that the resistance is relatively light. I think psychologically clearing the 200 will be a big boost for it. So look at this on the daily chart now. You can see the nature of this big base here, and we're coming up strongly in it. And we've only got a little bit more to clear here, and then it will. Then I think, you know, so that's a little bit more to clear here. Then it could release a lot of upside energy there. So I think the Bitcoin, Litecoin, which has moved from least favorite, you know, which was right because it was the one that was hurt the most and crashed the most, to being the favorite from the biggest bounce potential with so little above it. So the order of things now would be if Litecoin can just edge up a little bit more and hold this a little bit more, this I think will have the best upside potential, then Ethereum, and then Bitcoin. Now moving to gold. Well, gold is it's so frustrating, gold, isn't it? It just, you know, gold bugs are really, you know, having not a good time. Lower highs in play here. It's looking, you know, when you compare the strong things, we've got the stock market, we've got the cryptocurrencies, and we've got the dollar and gold here. Look at the chaos in the world, the fear of inflation, 4% being, you know, quite a possibility for US inflation, and yet gold is stubbornly stuck and looking quite soggy, really. So here it is. Yes, we did come up a bit, then we had a flat week, and that was because of this resistance point level that we had recognized here, came up to it, staying below the 1,770 area where the resistance started, and it's lost momentum there. It's really going to struggle to advance. So layer after layer of resistance here, and it doesn't have the energy. So we've got resistance at 1,800, up to 1830, support at 1750, and then this spike low down here at the 1684. But when you get those kind of spike lows, it's very often, it's, you know, it was a spike, it was an aberration, we will very quickly bounce from it, but that is often actually an indicator of where it really wants to go. The fact that it could do that probably indicates where it is finally going to go. Now, before I show you silver, I just want to show you the gold-silver ratio here. We've been saying gold, not good though it is better than silver, but this has really taken on a very strong trend here. So this rising here in this chart is gold divided by silver, is strength in gold versus silver. So the very clear and strong message of gold outperforming silver, powering ahead, but there's resistance coming up here between 75 and 80 I'd put in here, and that's starting to intensify. So maybe that outperformance, which has been so strong, is about to ease back. But let's look at the silver now. Silver doesn't look good at all. It looks really, really threatening. We've retraced 38.2 on the weekly chart by moving back to $23 here, and this is a place to hold if it really is going to hold. But the technicals are pretty negative on the weekly chart. On the daily chart too, the technicals are very negative. We've got lower highs. I put this dash downtrend line here. They don't line up properly, but we've got lower highs and lower lows. Bollinger Bands are going down with the price. They're nice and wide, so we've got strength on the downside. The ADX is at 40 and rising. The downtrend is strengthening. Yes, the RSI has come up through 35 from below, so we've got a kind of short-term message there, but the MACD is still negative. So, you know, silver is still bearish. Moving now on to Brent crude oil. My goodness, Brent crude oil had quite a week, didn't it? It had a 7-session fall before the Friday bounce. So here we've got the weekly chart. Let me do the weekly chart on Brent crude oil. We had been talking about this and the loss of momentum, high, higher high, high, lower high. Then it started to turn down. Then it broke uptrend lines, and then finally it broke down. And we had those 7 terrible sessions as it collapsed. And now it's become quite oversold. and turning up through 35 from below on possibly a correction underway now, but the MACD on the weekly is still very firmly bearish. This is a bear market, not a bull market. Here's this cigar, big cigar that we put up here. This is a Siglio number 2, and was the one that that caused the market to, this failure here on the retest was catastrophic for it. Breaking these lows at 67.50 was catastrophic for it, and it's looking very heavy indeed. The downtrend is strengthening. The ADX is up at 27 now. The RSI on this one candle has come up, but the MACD is still negative. Lots of resistance at 67.50 upwards here, which is, if it does correct today and tomorrow, that I would see as a correction in the down market, in a bear market now in crude oil. Moving on to the stock indices, the S&P.
Trevor, Trevor, can I just interrupt you for a second, please? We actually had a request today, an unusual one, in fact, to take a look at an indices. We don't actually offer it, but maybe it would be useful for you to take a look at. Would be the FTSE 250.
Oh, okay, sure.
Yeah.
I will do that. That's an interesting thing. It's not usually traded, the 250. There isn't a futures market on it, for example. So even to offset it for a CFD, there isn't anywhere to offset it there. So it's nobody really quotes it there, but it's a very interesting index and much more representative than the FTSE 100. So yeah, I'll be pleased to do that. Let me come to it. I want to start with the S&P, if you don't mind, first. So here's the S&P. Let's admire and enjoy the weekly chart here. You don't see many charts like that, do you? Not in a big market like an S&P. You sometimes see it in a minor commodity when there's a shortage of it, but this is an astounding move here, really defying gravity, I would say. But as I warned you last week and the week before, we've got deteriorating what we call internals for it. So the week before last, we talked about this being a seasonally weak period starting the week before last, but lasting through to mid-October. And so the whole month of September, the fact that it's not weak yet doesn't mean anything at all, because the period is quite long for it still. It's still not weak at all. So that's one thing. So we've got the seasonal pattern. Lows are often made in the third week of October. Think of the crashes. They've all been in the third week of October. They made their V-shaped lows, and then we have a strong period at the end of October, seasonally. The second thing is I talked about the sentiment. Strangely, actually deteriorating. So there are two major measures of retail sentiment in the US, and both of them are showing that the retail investors are becoming more cautious about the market. Now, usually they are very enthusiastic when a market's going up, and they want to buy more and use their margin profits to buy more. But it seems to be that they're becoming more reluctant. Also, the ETFs in the QQQ and the SPY and all these sort of things have had quite sharply declining inflows. So people are getting less keen to buy more of it. That's not bearish, not selling it or anything like that. But something which is, I think, of importance is that in the Tech 100, which I'll show you a chart in a moment, the advanced decline line, so that's of the 100 stocks, the number of rising stocks divided by the number of falling stocks has reached a 9-month low. So, in a strong market, it should be broadly based. Most stocks should be going up, but it's getting narrower. It's fewer and fewer stocks which are responsible for the advance. That's not a healthy condition. Either that has to change in that it broadens out, or it's telling us the message that without those few 20 stocks out of the 100, if any weakness appears in any of them, then the whole index is going to fall away quite sharply, because many of them are not going up. That's the thing. Many of them are not going up. So here we've got, anyway, in the S&P, which is clearly going up. We had a wobble in the week, but that seems to have been another case of an astoundingly brief correction, which just they don't seem to last these days, and it seems that there'll be a scramble now, probably to buy, and the fear of missing out. It's all over, and I didn't buy enough, so it's come back to support here, and they supported at 4367. It's undeniably bullish. But look at the ADX. The ADX is the measure of the strength of the trend. This has really come down a lot. So the strength of the trend, surprisingly, although we've gone up a lot, is weakening. It's at 12. So just note the number. That's a pretty low reading, 12. Below 20 is considered not trending, actually. So then let's go next to the Tech 100. And here we've got, well, first of all, let's look at this. So we're moving up very strongly in the long terms, the weekly chart, but we've got some loss of momentum here. It's curving around the top here. NASDAQ, don't forget the internals are weakening. And so here, we haven't made a new high in it since the first days of August, whereas the S&P keeps making new highs. We've had a pullback. It's now started to rally. The weekly MACD is still bullish. There's daily support at 14,770. Very much loss of momentum, but the ADX here is 14. So a little bit higher than the S&P 14. Now, and the trend is still up, of course, as defined by the weekly MACD. So we've got a kind of weak upward trend. That's very surprising when you look at that chart. You say it's a strong upward trend, but it actually is weakened a lot in there. And now going to the FTSE, we'll go to the FTSE 100 first, if that's all right. So this is the only made up of 100 stocks. And this, I keep telling you to watch out for this. We have come back to an enormous resistance level, which is, we're right, it goes from where we are now, we're anything above 7,000, all the way up to 7,000, all the way up to the top here at 7,900. We'll call it 8,000, between 7,000 and 8,000. We spent literally years in that trading range, and we're there now, and the market behavior has flattened. We've got lots of momentum. The MACD is negative here. It's not bullish, it's negative, and the RSI has got declining tops. That pressure is, if you know your cigars, this is a Trinidad, which is the biggest of the cigars. That is a Trinidad of a cigar there of resistance. Hope you don't mind these cigar analogies, but it happens to be a hobby of mine. We've hit that, and we've talked about it endlessly, and the market is really can't. It just struggles to go up. On the daily chart, we're flat here, and we had quite a good sell-off during the week last week. There went down to below 7,000. There picked up a bit of support at 7,000 itself, but this is a very unattractive market here. The ADX is 19. That's quite a high reading. That's higher than the US 500, which was 12, and higher than the Tech 100, which is 14. But it's 19 because it's in a downtrend. So this is actually, the weekly MACD is negative here, and so the downtrend is strengthening. That's what it's telling you. We're going down, and the trend is strengthening. Okay, now that's not what we're used to hearing in stock indices. Now let's go to the all share here. Now this is much broader index here. It's not as broad as the 500, but it's the best indication of really what UK PLC is doing. The FTSE 100, for other reasons, it's so heavily dominated by commodities and mining countries and dollar earners. It's almost a commodity index, really. There, the industrials are really in this broad index here. Once again, we're right punched into this area of massive resistance here, and this goes from 3,700 to 4,000. 4,000 and come on, 4,300, let's say there, that big area there. We punched into it, it's lost momentum, lower highs in here. MACD is negative, and so we've got from a weekly perspective, we've got a downtrend in the MACD, and so we've got a lot of weakness coming to the longer term picture. So we topped out here, we had the sell-off here, the same sort of sell-off that we had in the FTSE itself. It was supported as well and bounced, but this is also looking quite weak. The RSI is going down, the MACD is negative on the daily, and we've got a ADX reading here of 15, which is higher than the Universal Tech 100 and the US 500, but the trend is not up, it's down in this now. So watch out here. When you have this kind of resistance, it's really hard. If the whole world stock markets are going higher, like the US ones are doing, let's say the US is the whole world, then this is going to be your lagger. This is going to be the least attractive of them. Maybe not the least attractive, but it's going to find it hard to be pulled up. It's really, there's so much resistance there. So many people bought stocks in here, in this period here, and they're just going, oh, please, 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 go up a little bit more for me, please, so I can get out of that horrible thing. And I sat through all that there, and I watched my stock half in price, and now it's coming back to break even. It's like getting out of jail free, but those people are all sellers. There are a lot of them from this period here. Then finally, Germany. So the German 30. Now this is a better looking picture here. Now what we haven't got, this is a weekly chart, is where's the big heavy cloud? Where's the Trinidad cigar? There isn't one. We're in blue sky here. It's a deep blue color. That sky, it's going up beautifully here. We have got a slight slowing up going on. The MACD has crossed and the RSI so it isn't as strong as the US ones are, but it's still much better than anything else in Europe. But it's worth noting, going to the daily now, that actually we had last week we had the worst day in 6 months, actually, or the worst fall in 6 months there in it. So so it's prone to having sell-offs. We had a gap. The gap has been filled, and we've got a black candle. Those of you who know your gap analysis will know if you fill a gap and then go down. This is a downward gap. That's a bearish short-term pattern there. So a little bit of bearishness in here. Support, a very important support to hold is 15,621. Very, very important support level to hold is 15,048. So slightly weakened technicals, but the weekly picture here is still good and the best in Europe, if you like. But it's got an ADX reading of 14, and so that's it's okay. Let's put it that way. So it's the best of the bunch, not including the US, which is obviously the king of the pile. Okay, I hope that was all right. I hope that answered the all-share question. Maybe it's disappointing that you wanted me to be more bullish, but I just see that big resistance as too many people that have sat on losing stocks for such a period. They're all potential sellers that will stifle that advance there.
Okay, well, thank you very much, Trevor. Do you have anything else, or shall we sign off?
We can sign off. I just watch this dollar, because the dollar is pivotal. It's for everything really. I think if the dollar starts to increase from here, it's going to become a big problem for the authorities and getting a little bit out of control. They're very aware of these levels, and so they could say that Elliott Way is right. This is enough for the US dollar, and they could, through rhetoric, the Federal Reserve could weaken the dollar. but I'm not sure that they're able to do it. We'll see. But it's very important because the commodities, gold, the crude oil, and many other things are just pivotal on this sentiment of the dollar. And I'm getting increasingly concerned about the US stock market. It sits there alone in looking so bullish. And when you look at the chart, maybe I should just believe my eyes, it is so bullish. But so many other things are deteriorating in it. I know I've said it before, we've all technical analysts in the rise have seen tops in the market, didn't turn out to be tops. And I don't think it is the all-time high or anything like that. It won't be breached, but it is very much overdue and showing the signs of cracking. It's seasonal. And so watch out, be aware. You know, the energy market had that. And those are exactly the words we were saying about that bull market there. It was losing power, it was internally weakening, and then it cracked there. So, you know, pay attention. Thanks, Dan, very much indeed. Thanks, everybody, for joining us.
Yes.
It's always honoured.
Yes, thank you very much for attending, everyone. Please join us again next week, same time, same place. And don't forget that we'll be posting this webinar to our YouTube channel in a few hours or so time, so you can watch the whole thing again there if you like, or you can just watch a piece of it. And if you do go over to our channel, don't forget to click on the bell and subscribe, you know, to get notified. Okay, well, thank you very much, Trevor, and I'll speak to you next week.
Okay, thanks very much, Dan. Thanks, everybody. May the trend be with you. Bye-bye now.
Bye-bye now. Bye-bye. Bye.